we definitely have this, the term bearish really isn't the right term, but it is a kind of a bearish pattern that's developing. These lower highs and lower lows certainly suggest some exhaustion within the markets. Here's what you need to know before the bell this morning. As we noted yesterday, in particular, the markets are doing fine, right? Nothing wrong with the markets at all. Markets rallied a bit yesterday, and kind of recovering from that sell-off that we saw on Friday. It wasn't a super strong rally all day, but it was a decent rally. And again, we just continue to kind of work within this kind of this trend of lower highs, and at the same time, we have these kind of lower lows that are getting built in. So we definitely have this kind of this more, the term bearish really isn't the right term, but it is a kind of a bearish pattern that's developing. These lower highs and lower lows certainly suggest some exhaustion within the markets. Money flows remain positive, but they are declining, starting to decline here a bit. Again, money flows got to, pretty much levels where you normally kind of see, kind of short-term market peaks. And so again, we may be entering into a period, and again, just statistically speaking, the month of February, the last half of February, which we're getting into this week, is typically fairly weak. It's the weaker part of February. So again, this kind of pattern that we've got going on right now and these weakening money flows certainly suggest we may see a little bit of weakness in the markets here over the course of the next couple of weeks. The 100-day moving average currently sitting around 5,900 ish on the S&P. So, a pullback from 6,000 to 5,900, right? It's only 100 points, but, that's going to kind of wake investors up here a bit, particularly given the amount of FOMO, and we'll talk about that this morning. Retail investors have been just piling into the stock market here over the last couple of weeks. And again, we're very close to short-term sell signals, so that would also kind of support a bit of a, kind of a bit of a pullback here, some more of this consolidation, kind of more of this drag that's been in the markets as of late. Again, nothing overly concerning at this point, nothing to, suggest that you need to make radical changes to your portfolio mix by any stretch of the imagination, but certainly some indications that, we are starting to see a little bit of weakness creep into the overall market. And the one thing that may contribute to that a bit more is the dollar. The dollar is very close here to triggering a buy signal. And again, we've had this nice correction in the dollar. That's been supportive of these kind of market rallies despite, the impact of tariffs and all this other news headline we've had. This little bit weaker dollar has been dragging some money flows into the U.S. So again, but we're very close here to seeing a buy signal. So if we see another surge in the dollar back towards, 110-ish, that certainly could weigh on markets here over the next couple of weeks. So there's some things kind of lightening up, kind of lining up here a bit that, may suggest a bit more consolidation, a bit of a pullback here. So, one thing you may want to look at your portfolio is just readjust risk. If you haven't really liked how the portfolio has been performing over the last, couple of weeks in particular stocks not performing really the way you expected, this is a good time. Use this opportunity. The market's been holding up well here. Use this opportunity to kind of rebalance that risk in your portfolio just in case we do get a couple of weeks of kind of seasonal weakness as we get ready to head into March. That's what you need to know before the bell this morning.